Thank you so much. Just want to quickly do a quick setup here. This camera is meant to follow me. It's on a DJI gimbal. So I think a lot of you are quite curious about the setup because I've had 4 questions already. We've got a little mic here attached to the cell phone, and it is meant to follow me around, as you can see. Very handy technology. And then this mic is connected to the phone because I'm hoping to share this later on LinkedIn if it's not a train smash. So let's see how that goes. Thank you all for taking time out of your Tuesday evening to learn a little bit about this topic. So Jean asked me to just clarify that AI does not stand for artificial insemination, but rather artificial intelligence. I'm going to be sharing with you a story. When I rehearsed, I had a first go. It was quite technical, and my 2 cats, which were my audience, lost me completely. So instead, I'm just going to try and make it a little bit more relatable and not go too far down the technical rabbit hole. So the insights from industry, which is basically part A that I want to be sharing with you, extends to where I work currently, which is EasyEquities, and then the insights from academia pertains to my research at the University of Cape Town, which is also gaining quite a bit of traction. It's, as of 2025, my research is the computer sciences premier paper. We are flying down to Jordan later this year to present it at a conference called the European Conference of Information Systems. And then the same conference is slated for Italy in 2026. It's how the university gets their rankings. It's like a big deal for them. And the paper that I'm going to be showing you pertains to that and the research initiative. But before I start confusing everyone, let me first just introduce you to a few key concepts, just some terms, because I'm going to be using them throughout the talk, and I may lose you if I don't just quickly do key terms. So hopefully, we all sort of know what's happening with artificial intelligence. I'm afraid to ask who has not heard of ChatGPT. Raise of hands. Okay, I don't need to know. It doesn't benefit me knowing, so keep them down. Hopefully you've all heard of ChatGPT and you've sort of seen what it can do. It's an AI assistant. It can speak in natural language. It can literally have a conversation with you. And it's not going to glitch out on you if you spell something incorrectly or what may be. So AI is the term I'm going to use. Now, the contemporary AI that has really been all of the talk of the town recently, really, the technology underpinning most of the modern AI that's hyper intelligent, I would say, we refer to as LLMs, large language models. It is the architecture of the modern AIs that basically is underpinned by this, what I would call modern day hyperintelligence. It's a type of machine learning model. There are other types of models that are also now stepping into the dialogue and natural language space. But for the most part, LLMs have pioneered the modern AI that is able to talk to you, write code, solve problems. So when I say LLM, large language model, it's just a fancy word for a smart AI, basically. Okay, now, agent. I'm going to be using this term. It's used extensively in industry. It is effectively like a node, a single AI helper. So if you have the ChatGPT app on your phone, which I really hope you do, if you do not, go and download it, start speaking to it, ask it weird and wonderful questions, see what it does. That is what we call a mono-agent architecture. It's just you chatting to one agent, one node, one helper. So that is an agent. Now, the concept that is really buzzing in academia is the term agentic, which is basically multi-agent. It's the whole premise of, instead of just talking to one ChatGPT or one LLM node, I'm actually interacting with a team of AI nodes. And the premise underpinning that is more accurate results, superior results, better problem solving. One is better, or more than one is better than one. That's sort of the thinking behind agentic. So agentic, multiple AI, team of AI. Think of it like that. Cool. Now, RAG. It's not a lappy. Retrieval-Augmented Generation, RAG. So let's use lappy, just so it can stick in your brain. Otherwise, it's going to stick out of your brain. And I'm holding a dirty lappy, and the dirty lappy has a bunch of text written on it. And that's my text. That's my secrets. It's my data. Okay? So when we think of RAG, think of a dirty lappy with my secrets on it. It's got my data. That's going to be hard to forget, I hope. Now, RAG is the process of getting your own, how can I say, your own external data into some kind of AI interaction, above and beyond the text you give it, above and beyond the hello. So it's like, what is your national ID number? What is your bank balance? What is your criminal record? Or something like that. External data that you don't really need to give it, but it already knows. Let's call RAG the process of getting that external data into some kind of system that achieves some kind of goal. Okay, so the one side of the talk is the academic side. The other part pertains to EasyEquities, which is where I work. I'm the head of platform for the mobile application. So for those of you who don't know what EasyEquities is, it is actually South Africa's largest brokerage in terms of number of funded clients. It's not the largest investment platform in terms of NAV. A few of the banks have the high NAV clients. But in terms of sheer numbers, we are the biggest brokerage in South Africa. And we've grown to be that in a matter of 10 years because we have global reach and we have low fees. And we have a brand now that people trust. And trust is the one pillar that I think was the biggest obstacle when introducing a new brand where you send your money. But now that people are getting more and more familiar with it, they are committing their life savings, I suppose, especially the younger generations in South Africa who care about the fees associated with investment trades. It's catching on, and it's the biggest brokerage in South Africa currently. Now, on the other side, we've got the research initiative. The title of the paper is Informing Investment Advisory with Multi-Agent RAG. So now you kind of already know what's going on there. It's a design science approach, a research initiative from the University of Cape Town. And we had to give this research and the thing that we have built a name. So we gave it the name AVA. So initially the name was Agentic Valuation Advisors. And what? That's boring. I've already lost you, right? So we renamed it. Absolutely very amazing software, because that's what it is. All right, so there is actually software associated with this research initiative at UCT. Cool. So just a quick little sneaky background about myself. Mark already explained my academic background. I taught IT at the University of Pretoria for 2 years. I told you my title. I'm in software development. I lead software development teams. And in my spare time now and my weekends and things, I'm researching AI as part of my dissertation. So everything I do in my life basically touches on this presentation, inside and outside. So what have we done currently in industry with the AI initiative? Like, what's the cool things that are being built right now? One of the very cool things we built is AI baskets and advanced search mechanisms. I'll start with AI baskets and sort of what we've achieved and why it's growing in popularity. It is essentially an easy way for investors to get access to some type of diversified theme that they believe in. It's somewhat rudimentary because that's really all it is. It's a diversified product specified by you as someone who sees an appeal in any kind of sector. And I'll give you an example now. But here's an example of me creating a theme in EasyEquities. We've got this UI where previously I actually created a mining theme. So these are all the previous themes I created and invested in as diversified products. And then I decided, okay, I want to invest in American car manufacturing. So in doing this, I wonder if I can skip through here. It's a little bit slow because there's a lot of thinking going on in the background. So the AI is basically collaborating, trying to find an ambit of investments that meet your theme, compiling them, and then sort of designing this basket for you. It goes as far as sort of creates an artwork that aligns with your theme or your concept, driving American innovation. And it creates a little description describing what's going to happen with the theme. And then eventually it will present you with a bunch of products that meet that theme criteria, at which point an investor can decide, I want to research these stocks and include them or exclude them from my diversified product. So it's very specific to those investors that want to invest in a diversified product of some concept in the investment world that they want exposure to. And then we present them what we have found from the database, and they can invest in all of them in a single trade, and they can deselect them as well. So here you can see I'm just sort of scrolling through the constituents of the basket, looking at the price. Here we can see Ford is down 23% as of the time of this recording. I'm sure many of you know markets are quite bloody at the moment. So yeah, and then I think here I expanded on the General Motors ETF, and we also link you to resources that accommodate deeper due diligence on any given stock. So what I did here is I said, okay, I want to do an equally weighted basket, and I'm going to do a big money trade of $6. So boom, I didn't deselect anything. I was happy with the constituents of the bundle, and there I'm an owner of an American manufacturing diversified investment product, and I only spent a few South African cents on it. So that's one of the things we built. And we see some very interesting themes come out of this space. So that's one of the things that we have already achieved. That's done, that works. It's theme-based investing. It's not that complex, but it's something that hasn't existed before and exists now. Another thing that we achieved, and part of the reason I think we've sort of seen EasyEquities as a big success story, is because we offer asset exposure to various asset classes such as crypto assets, as well as properties, as well as bonds, ETFs, equities across global markets. So if you want to invest in the United States, if you want to invest in Europe, in UK, all of that is accessible as a low-cost investment platform for investors to find and access with ease. So another example, if you want to be a little bit more active in your investment decision, I searched in this example the term microchip, which is the technology underpinning modern computers, the microchip that processes things, and then we see the stocks associated with that. So we've really sort of doubled down on making it easier for users to search conceptually as a result of certain sort of abilities unlocked by modern AI. It's a small thing, but it's cool, and again, asset classes that are not available on any other investment platforms. But now that, again, it's just theme-based investing, which a very sophisticated fund manager will tell you, come on, dude, really? Like, there's so much more to investment management than just themes. And they are right. There's a lot that goes into investment management. And there's a lot of depth in the data we have available to us. So here's an example. You are a little bit more of a sophisticated investor. You believe in the tenets of Warren Buffett, Benjamin Graham, value investing. So you start to look at things like, I want to only find stocks that are profitable, that have a price-earnings ratio less than 12, a price-to-book value greater than X, Y, and Z, and then immediately I've lost half of the audience because that's not easy. Now, you kind of need the expertise of a fund manager. Now, this is cool. It appeals to a lot of sophisticated investors, but AI has the ability to now take this data and take making smart investment decisions a step further by combining everything we need that a fund manager could theoretically give you, along with your individual investor preferences, because you might really undeniably believe, and rightfully so and correctly so, in the right industries and the right concepts, but we may need AI to help us do the deeper due diligence of the financials behind those investment decisions. That we haven't built yet, okay? That's where my research initiative at the University of Cape Town comes in. So achieving this is a little bit more difficult. In fact, there's a lot of data involved in those kind of things with all of the publicly listed data available, not only in equity instruments, but in various instruments, including crypto assets. There's so much data. And AI can only deal with so much data before it starts getting confused, right? So that's where this research initiative comes in. It proposes a team of AI agents to effectively help conduct investment research, make responsible decisions for any given investor, and deliver substantiated advice. Now, it's a very scary concept because I think a lot of people in this room will never trust AI with their money, but we have the intelligence at our fingertips, so why not try? And then maybe in the future study whether those investment recommendations are good or not. So I sent the paper to 3 different professors, and I met with them. And they all said, it's kind of cool, but you're building something, and we kind of just want to observe reality. We don't want to innovate. We're not about building things necessarily in academia. And 3 professors said to me, no, sorry, dude, this is not really our thing. It's not very academic. Then the paper got passed around at the computer science faculty and caught the attention of these 2 gentlemen, and they both reached out to me and they introduced me to the concept and the field of design science. They read the paper and they said, there's one thing you're missing from your paper. It's you're just not speaking on the concept or the field of design science because you're trying to innovate here. So it turns out to be a very legitimate field. It started off as a collaborative study from the University of Nevada, Auckland University, Hong Kong, New York University, Helsinki, and it has, I think, over 20,000 references, which is a lot in the field of academia in terms of other papers that have referenced this. But what they said is using design science, specifically motivating it with this framework, you can get away with doing a little bit of innovation and actually focus on solving problems as opposed to just observing reality, which is what most of academics does, except for engineering. But engineering is kind of like a lot of in finance, engineering and the papers associated with it were just not considered the same caliber, I would say, because they're just building things all the time. And I found somewhat of the same thing in IT until I came across the wonders of design science. So it's a framework for designing things in a nutshell. I think we all get that. I'm going to move on to the next concept. So what have we done with design science at the University of Cape Town? A lot of brilliant minds at this point have contributed to the project. So it is an open source initiative and currently a mobile app that does exactly what I've described in terms of agentic architectures. AI teams collaborating to make smart investment decisions or recommendations at the very least. So what we're trying to achieve is quite ambitious. We're trying to make it safe, one. We're trying to make it auditable, governable, and accurate, robust, where it does actually give very strong and substantiated investment insights, better than that of any given fund manager. That's the one side of what we are, I would say, somewhat achieving. One thing we've definitely achieved is integration with real-time data. And this is where RAG comes in. And that was a big unlock, because we can now bring into a team of AI agents real-time pricing data, historical valuation data, and pretty much just give it to the agents to work with and make investment decisions. But the way in which we delegate the data is where this gets exciting. So we understand what RAG is, right? It's bringing our data in. In this case, it can be your historical portfolio data, it can be your age, it can be your risk profile, which is also gathered by the agents as they talk to you. And they're figuring out, so we're using a team of AI agents to basically achieve the following. So think of it this way. You've got several nodes, okay? Instead of just a mono-agent ChatGPT like I described earlier, let's say you've got 8 or 9 agents, all mandated to do very focused things while interacting with you. Now, this doesn't work unless you actually have a person, you, the user, interacting with the system, permitting access, giving it your data, and cooperating. So that's the first thing we need to acknowledge about agentic architectures in a modern day setting, especially in this investment advisory role. That's one thing we found. Another thing is we realized that not all agents need to do and calculate everything using their compute power, because hard-coded solutions, and I'll explain what I mean by that shortly, but if you give your agents tools that are pre-coded, instead of relying on them to calculate certain things, and you give them the tools to do it, like a calculator. An agent can do math when you ask it, what's 4 times 12 on your phone? But it uses that agent's compute power. But if you give that agent a script and you say, hey man, we've got this pre-written methodology using some kind of coding language to calculate something, you don't have to spend your thinking on this. So that's where we've also explicitly highlighted this in our research, that these architectures also do better if you can define in advance what needs to be hard-coded. So like another example is a compound interest calculator. Those things an agent can do, but it requires more compute power. And you have to manage your compute power wisely when you're creating these teams of AI bots to solve problems for you. So that is something that we've introduced. And we've built it. Most modern AI RAG applications sort of look like this. You've got your data, you've got the user, and you've got a vector DB. a very fascinating technology which most people haven't heard about. It is a three-dimensional storage mechanism. And then through this three-dimensional storage mechanism, you have some kind of system that can retrieve the relevant data and then feed that into a single AI, and then it might give you some kind of relevant result. Mono-agent architecture. What we are doing is effectively just introducing multiple agents into this process and giving them hard-coded tools to not reinvent the wheel and waste compute power for certain type of investment interactions. So this is, it's quite open-ended because you have to sort of know in this kind of interaction of seeking investment insights, of seeking advice, you sort of want to know what are the typical questions asked, and you give that agent the tools to do that. But the best part is you can use agents to build these tools for you as well. So that's not manual labor that you have to unlock. You're using AI to build AI in many ways. You're just pre-coding certain things in advance for the AI to use later. So things are getting quite meta in industry at the moment. Okay? So this whole thing of vector databases is fascinating. I think at some point, most of the people in this room may have used Excel. You've got your rows and you've got your columns. That is a two-dimensional format of data storage, specifically structured data storage. Vector databases take things to an n-dimensional plane. Think about your data as being stored on an x-axis, a y-axis, and a z-axis. So this three-dimensional space of data. Now this is very relevant in modern AI data retrieval because instead of now just structuring your raw data in this 2D space, you apply what we call an embedding model, and you create a vector embedding, which is a position in your three-dimensional space to place your data. Okay? So now you guys are learning some cool stuff. So here's an example. We've got this three-dimensional space of where we keep our LAPI data. Okay? Now, you may have an apple that you eat among that data. Let's say you've got 100 pages about yourself, right? And in those pages, it talks about how you like eating apples, but it also talks about how you invest in Apple stock. So now that you have this three-dimensional data space, you have to wonder, how do you retrieve data accurately if it's all clustered in this weird computerized three-dimensional space? That is where the concept of semantic probabilistic clustering comes in. So data is not retrieved explicitly, but it's retrieved probabilistically by associated surrounding context of your supporting data. So your Apple data that may sit in a document or some kind of unstructured data somewhere else, the surrounding keywords like invest, stock, price, Tim Cook, those things all increase the odds of the AI retrieving that associated data correctly. Now, why is that powerful? Because all of a sudden you go from structured data being very limited and very precise in the retrieval rules to having tons of data that you can retrieve. Lots and lots of data. So data is the name of the game. It is the currency of the AI universe. And especially, there's two layers of the data. There's the AI data itself, with which the model is trained, and then there's the RAG data layer, which is used for very sophisticated modern data retrieval. Now, what we see is because we have this probabilistic retrieval mechanism in n-dimensional space, we see mistakes, right? But it's not necessarily bad. It's just, it tends to happen when you have a lot of data and a lot of probabilistic overlap. It doesn't mean we need to give up on AI. It just means we need to acknowledge that there's an accuracy rate. And academically, we have to address the issue of this retrieval by mitigating what we call hallucinations. So when there are mistakes, not only in retrieval, but maybe in solving problems, we call those hallucinations in the AI space. Okay? Now, what I taught you about agentic architectures tries to solve this very problem. So it is when a model generates outputs that are false, misleading, or nonsensical, even if they appear plausible. It's because it's working on this weird probabilistic plane, but we mustn't discount what it can achieve when it is right. Okay. Now, this is where Berkeley comes in. They studied this very well. They said, okay, we're giving this data to an agent, a single agent, and we're studying what it does with that data. And the paper is titled Lost in the Middle, How Language Models Use Long Contexts. And very simply, they show that models have a front side and a back side bias in terms of the data that they may or may not retrieve correctly. So the retrieval accuracy increases in terms of if you have your important data in the beginning of your unstructured, let's say it's a long document, and at the end. It just gets lost in the middle. Okay. Another very interesting paper that tackles this issue from Stanford University is how we substantiated the way we actually built our artifact. The paper is titled Mixture of Agents Enhances Large Language Model Capabilities, and they show very robustly that agentic architectures, essentially, what they call MOA, mixture of agents, outperform on various benchmarks. Same with humans. If you collaborate a team of humans effectively, you can just achieve superior results. Now, that also is a very robust academic underpinning motivating our paper. All right? So this paper was the final cherry on top, I would say, in terms of motivating what we were doing at the University of Cape Town. It's a paper by Lowe and Ross. They specifically talk about the limitations of AI in the space of financial and investment advice. So they're calling for a solution to sensitive use cases, especially when it comes to these kind of financial interactions. So again, we motivated our paper with this. All right. Now, when I was presenting to my cats, I explained the architecture to them, and I don't think they were super into it. And I realized I'm not going to do that with you guys because it's just going too deep down the rabbit hole. But in a nutshell, we've created this architecture that has multiple agents depicted by these columns doing various things in a very governable way. So the research hypothesis is sort of, because we have a certain level of rigidity in the way in which we create what the team of AI agents do, it's safer. It's auditable, it's governable. So we're of the opinion that to build safe AI, especially in the investment space, you may benefit from having somewhat of a rigid architecture in terms of mandating what agents do. So let's say, for example, Agent 1 is responsible for tax. Agent 2, very responsible for building your risk profile. That's all it does. Odds of hallucination are significantly lower if you have multiple agents told to do one very explicit thing. The odds of success just go much higher. Then you have another agent responsible for scraping the news, finding what's happening, what is the sentiment of this stock or this theme that you want to invest in. Then you have another agent responsible for scanning financial statements. Then you have an agent that potentially collaborates with that agent because that's a bigger task, right? financial statements, a lot of data. Let's put 3 agents there. The point is, we have a scalable architecture that we can somewhat refer to as an action model of events, built to deliver responsibly informed investment advice. So we take risk profiles into account very importantly, and they have to influence the recommendation at the end of the day for what you can and should not invest in. If you're an older individual, financial theory says you should probably be a little bit more invested in bonds, and it has that knowledge obviously at its disposal. Okay, how long have I been speaking? It feels so quick for me. Am I deep? I'm deep, aren't I? Okay, cool. So I'm going to do just a very quick demo. Here were some formulas that I was gonna share with you guys, but I'm definitely not going to share formulas with you now. So here's the software, the demo of what we've built so far at the University of Cape Town. So we've got this conversation memory setting that you can set. You can specify the number of messages you want to include. That researchers basically play around with. They select their agent models. So in this case, I'm using 3 different GPT-4 models, and I start interacting with it. So it asks, how can I help you today? I say, I don't know. How can you help me today? There's an agent doing a thing, starting to already track sort of what's happening. Hello, I'm here to help you with equity advice for investments, specifically for publicly listed companies. My goal is to make dissecting investments accessible and informative for you, and it elaborates. Then I ask, what about my golf swing? Can you help with that? All right, so there's now a few agents looking at you, what's going on. I understand that you might be looking for some tips on improving your golf swing, but unfortunately, my expertise is focused solely on providing equity investment advice for publicly listed companies. However, if you are interested, we can take this further. So I see. How would I say, I would say I have a high ability and willingness to adopt risk. So now I'm cooperating with these agents. I have a NAV of 10 million Rand and a long-term investment horizon. So now I'm sort of answering what it wants. I'm cooperating, and it knows how to establish rapport. So now you've got another agent stepping in, coming and building a risk report. So it sees it's got a high willingness and ability to adopt risk, and it saves this report for retrieval later. And it says some things now about growth stocks, emerging markets, tech sector. If you would like to discuss any specific stocks or sector, we can do that. So next I say, I'm quite interested in the theme of AI investing. Could you please gather me a short list of AI stocks? I thought I typed faster when I filmed this earlier today. I was going to demo this in real time, but I was told that you should never demo in real time because demos always break. So I say, sort my stocks in descending order of market cap and dividend yield. And then I think I also asked it for price earnings ratio. I can't quite remember. Yes. So here it gave me exactly what I needed. Stocks sorted by market cap, the PE ratios of those stocks, the dividend yields, and it was a very nuanced, structured question, open-ended somewhat. But it knew exactly how to retrieve that live data. And it's still somewhat being monitored by various agents. My risk profile is just there as an example. And then I say, thank you so much. What did I say next? Please. Okay. So next I asked it to please compare the stocks on a price chart, if possible, of what it's sort of shown me. So I'm just going with it at this point, asking it, hey, let's cooperate. There it gives me the prices of NVIDIA and Microsoft over a 1-month period. And then it says, I've generated that for you, have a look. And now I'm going to say more specifically, can you compare the price of Tesla, Amazon, NVIDIA, and Microsoft? So again, it's sort of like a very open-ended question with a lot of data, because there's a lot of historical data points for each of those stocks. We ask it, we've got it, and boom, it just knows. It retrieves the data exactly how I want it, and it compares it on a price chart. And I can see, actually, over a 1-month period, surprisingly, Tesla has done well because of the dip 1 month ago, I would say. So I say fascinating. What stocks should I buy? So I'm explicitly now asking for investment advice, open to suggestions. So now the way in which we've mandated this agentic architecture is to read the conversation, investment advice, a Y is for yes, and now the whole team of agents know, okay, everyone get their things in gear, let's recommend a stock investment. So with a certain methodology in place, it has a universe of 5,000 investment instruments. It looks at various things in their financials. Again, the thing of the pre-coded methodology. That is a very sophisticated calculation that may vary between people who create these kind of architectures. But eventually, it comes and recommends Qualcomm based on certain things we said earlier in the conversation about AI and the universe of stocks that it's recommending. So it's showing this intelligence, it's showing this level of relevance, and it's effectively saying, hey, invest in Qualcomm. Now, the next thing I did, it's done. It's pretty much done. Last little bit of the demo now. I just said, please compare the market cap of NVIDIA, Tesla, Microsoft, and Qualcomm, based on what it recommended, on a radar diagram. So I'm giving it very out there questions at this point in time. Radar diagrams are also very, very nuanced, I would say, in terms of what they look like and how they need to be compiled. So we do that, and it does exactly that. So it has this advanced data analysis capability, and we're still researching the limits of what this can do, because we feel there is actually a limit to how many agents you can add before things start getting weird. We haven't reached that point yet, but we're hypothesizing that these things get weird. So we're calling for more research, and other people are also starting to research this. How long have I spoken? I hope it's not an hour. All right. Thank you so much.
Thank you, Don.
Cool.
All right. I know everybody wants to get home, but I think there are probably 1 or 2 questions in the room. If I could ask you to just put up your hand, and I'll take the mic along, and then Don can just answer from wherever he is.
Tom, that was great, very well presented. I just have one comment. There's an old Chinese philosopher who said, to know that we know what we know, so that we do not know what we do not know. That is true knowledge.
Thank you. From the Philosophical Society.
How does it deal with mean stocks? Because there's obviously a lot of human behavior in that, and it requires human behavior analysis to understand how companies like Tesla that have a very low PE ratio sort of get the valuations that it gets based on human behavior and belief in individuals and so on, whereby price is much more subject to interpretation and human behavior rather than statistically based.
I don't know, but I think really the markets are one big macro psychological case study, right? So what we're trying to achieve here, I don't think can answer what you're asking about the weird and wonderful things that happens when humans collectively decide to buy and sell things. But then again, you also have this very age-old legacy field of finance that has been studied for hundreds of years, And those have methods in place that we can use and maybe make good investment decisions. Maybe not. So we really don't know. And those are hard questions to answer.
Seeing what has happened in the past 3 or 4 days in the US with President Trump, tariffs, how much does your platform take into account this sort of black swan incidents happening?
It doesn't. It doesn't really take into account black swan incidents. It just doesn't. It's one of those things where maybe as an investor and the human at the tip of the agentic architecture, you still have to have that ultimate say and that ultimate guidance in terms of when to buy, having the guts to actually make that investment decision when things are bloody like they are now. Because it's easy to say after the fact, oh, I should have bought it, but you know, when markets are bleeding, you feel like you're catching a falling knife. So ultimately, maybe that's something that can be built as an additional agent that gives you some kind of score and tries to quantify it somehow. Maybe that's possible, I don't know. Something to maybe think about more, I guess. Good question.
John, can I just ask you, you did touch on it a bit, due diligence.
Due diligence.
But also with high-risk investments. I don't need that.
You don't need it, okay.
High-risk investments. And you're going to have rogue investors out there. And they're going to be on all of this. And they're going to be using cryptocurrencies and all of that. And so when you go, if I go in, and I start really dealing on this, there is no, you know, I could be sucking information from all those as well. How do you stop that? How do you police that thing? I don't know, that's what always worries me.
I don't know if you can police it, and I think at the end of the day, that's what contributes to some of the insanity of the market and the things you can never really predict when you are investing. You know, it's part of the chaos, and it contributes to the chaos, most certainly. In terms of how do you control it, that's a question at the forefront of everyone's mind. How do you build safe AI? We've got researchers currently saying a certain thing about how this should be built. You've got Team A saying agentic architectures should decide what they do. Then you've got the other side of the argument saying agentic architectures should be rigid and they should be told exactly how to do certain things. And humans need to keep control of those architectures. So I'm Team B on this side. Maybe I'll change my mind in the future. But I think no one's going to necessarily conform with what people say you should do. Both are probably going to happen, and the answer is going to be somewhere in the middle.
Okay, are we all good?
Yeah.
Hey, one more.
One more. Two more.
Yeah, Anton wants to say something.
Cheers. Just a quick one, thanks. I think the second part of your presentation, I probably got a bit lost, but the first part of interest was your EasyEquities piece, where you said you could pick a theme. So if I go on, I've never used your app and I'm not familiar with it, but if I go on and I say, as an example, I want to look at wine farms that can't export to America anymore. If I put that in, I want all wine farms that are exporting elsewhere. Is that the sort of stuff I could type in and would pick up a few shares that are... I'll just because I find the EasyEquities thing, that's the one bit I didn't understand. The rest I got lost. But is that something that easy when you say follow the theme on EasyEquities?
I think it would get that one wrong. I don't think it would get that. I think it's... At the end of the day, it recommends this basket and it makes an attempt with the data it has at its disposal. And maybe if there's some kind of news article on, and the news article points to all these things, it will probably be biased to that if you've built it correctly to look at news articles. which we haven't yet. But yeah, I don't think...
We could all chip in and find a share tonight. This is about okay.
I think the gentleman over there.
So I think less than 1% of fund managers outperformed index-linked funds over the last 10 years. If I ask the AI model that my aim is to outperform an index-linked fund, can it deal with something like that? And what does that look like in terms of performance over time?
I think if you ask it for results and ask it to promise results, we need to mandate it to say exactly what you said. 1% of active fund management is successful. It's very hard. If you are really responsible with your AI, I would imagine you tell it to disclose that and recommend diversified products. That's my best answer to that question. These are hard questions, actually.
All right, I'm going to pull it to a close. Just before wrapping up completely, I wanted to say thanks to Don. I think it was and then I'd like to pre-announce the next talk, which is on the 28th of April, I think. And it'll be Rob talking about his journey with diamonds in various parts of the world. I think it'll be very interesting, and I invite you all to please join us on the 28th. Thank you.